Hello traders, I hope you're doing well. In this video, which is the continuing of the previous video I did yesterday, if you haven't watched that, please go and watch. I'm gonna show you what happened after we closed the video and we actually found the trade and how we actually do the trading in fractal analysis kind of thing. As I said, we find a very good spot at the higher time frame and take that to the lower time frame, and then we pinpoint our entry again with the same rules. So this is the standard MACD, and these two moving averages are exactly almost like crossing them is like a crossing the moving average and in a MACD. So when the stock is low, we're looking at to buy because the price and those moving averages are above the 50 moving average here. So we're looking for a buy. We're in a 15-minute time frame, and the market price just came down all the way to the 50 moving average. Stochastic is under 20, and almost MACD is above zero, and it's trying to go up. It's not crossed yet. It's not crossed upward yet, but it's going up. And as you can see, let me zoom in a little bit. Here the moving average is cross and MACD crosses upward as well. And the stochastic has come up all the way because the stochastic is 533, the default. So it looks at the 5 candles only. But MACD is looking at the 12 and 26. So it has the 12 candles and 26 candles. So MACD is a little bit slower and shows a longer time kind of in backward. Now I'm going to put this line. This is a 15-minute chart. I'm going to put this line down here as a stochastic crosses upward and my default MACD is almost on zero. Remember, I told you whenever the price breaks a trend line, it pulls back up, in this case, which is upward. And then we try to get that pullback to the lower time frame. Now, we have a support and resistance line. Price acts the same thing. When the price yesterday broke this resistance line here, we wait for the pullback, which happened here. So this one is a small time frame. It is a small trend in a lower time frame. If I go to the 1-minute chart, you'll see that. So in 1 minute, you see this is the trend in the lower time frame. Because we're looking to buy the market, we're going to open a buy position. So we wait until the price breaks this trend line and goes up, and then we try to get the pullback. Here we have the cross. Let me put the line there exactly, right there. And the MACD crosses above the zero line. As MACD goes above the zero line, the stochastic comes and gets under the 20. There. We can enter there, but it's not safe yet. And the price hasn't broken the trend line pretty like obviously. It's just like playing around the trend line. This can be a fake out, a fakey. So the price goes up, everyone thinks that the price is gonna go higher, and they enter, and then the price pulls back and hit your stop loss. That's the kind of a thing. So to make sure that, remember I connected all the highs and lows, and I said I always trade the highs and lows. I'm gonna start from there to just connect the highs and lows. And you see why I always looking at the highs and lows. See the size of the highs and lows? It's like a 20, 30, 50 candles. And how long it took, like from there to there, it's like a 40 candles. From there to here, down here, like a 60 candles. This 3-4 candle cannot be a high or low for me. My highs and lows are above 30, 40, 50 candles. So this is not a good high or low. You must have the proportionality. The Persian trader that I learned it from said that tanasub. Tanasub means that the highs and lows, the length and the number of candles should be almost in the same range, that you consider that a high or a low. So instead of taking this part as a high, I'm going to take the actual height there. That's the high that I'm looking at. So if that's the high, this is going to be around, as you can see, 80 candles. So it's almost good for me there. And I'm going to keep connecting all these. One down here, again goes up and then comes down. This is not good, but because we don't have a low longer than that, so we're going to keep going with that. Goes up, and then it's going down now. So when the price breaks this trend line, that's the high that I'm looking at, and this is the low. And remember I said connect the high, connect the, well, in this case it's a lower, it's a downtrend, right? We're looking to buy, and so we look at the breaking upward. So we connect this low to the high that we're looking at, and then we take this line and put it on top of this high. That's our final target. The price is gonna hit there. Half of that, it's my almost like a 90% accurate target there. My entry is gonna be down here. Why? Let me put this line back again. Middle of that is in this range. You don't look at the exact middle, but in this range is gonna be your kind of entry point. So I'm gonna put a bigger line there, like that. So whenever the price goes up and pulls back to almost this area, you can enter. Your stop loss is again at the previous low, which is down here, and you put you add the spread as well, so a little bit lower than that. Now let's see how much we have as a stop loss or target. If we enter here in this red candle, let me zoom in so we can see the candle exactly. There, in this candle we enter. If I put the line there, as you can see, my stochastic is still under 20. So you can enter here because the price goes up, comes back down, and you enter here. Your stop loss is down here, is 195 pips. Your first target there, twice. Your reward to risk is 360. Your second target is up there, which is 540.
Incoming mail.
Okay, the margin requirement update. Okay, for a high impact news. That's all right. Okay, now in the 1 minute chart, as you can see, again, if you're going to follow the same thing, the market is going to fluctuate a lot, and we cannot.
Incoming mail.
I've got the second email. Okay. We cannot follow the exact thing, but in the general direction of the new uptrend, we're going to enter. So here, the MACD crosses up, and the stochastic is down here. The first one is here. The second low that we're looking at is down up there. That's the one that we can enter with almost accuracy. We get the 300 pips. You can double your volume, your lot size, and you get that, and you will be down. But if you enter at the first one, your win rate's gonna be a little bit, I don't know, higher probably, but your risk is gonna be a little bit low, based on the thing that you actually this is the first time that the price broke the trend line. The second time that the price pulls back, your chance of winning is a little bit lower, and you have a shorter time to actually get to the target that you want. You have a shorter target, you can add to your volume, your lot size, so you compensate for that, but you can put a risk a little bit here. See, this pullback is not in the middle of there, right? Your middle is here, so the price doesn't get there. You cannot have that kind of a reward to risk. But this one is perfect. The price moved up, came back down all the way halfway to this area, the best area, and then the stochastic is low. You enter here, your stop loss down there, as I said, 195, 96 pips, and your first target is double, 360 pips. Your second target, whenever you hit the first target, you can close half of your trade, you can move your stop loss to break even, you can do a lot of things. Whatever your money management says, whatever your checklist says, you follow that. I normally move my stop loss to break even, and I let the profit run. Or you can close all of your trade if you don't want to keep going like that. You don't know what's gonna happen. So this is 100% sure that you okay. I'm here. I made this much profit, and I'm gonna be out. But some people just stay if you tolerate these fluctuations, and then probably 70% of the time it hits your second target. But the chance of hitting your first target, which is half of that, this is the halfway, right? From the top, this is the halfway. The chance of hitting this half is almost like above 90%. Go and check, back test it. This 50% target is 90% accuracy. The second, which is 100% target, that's probably about 70% accuracy. The probability, yeah, goes a lot lower, but you can, yeah, break even, put it at the, save some profit down here, and then you can let it run. I normally exit at the 50%. So that's what happens when you take the higher time frame and you go to the lower time frame to find the exact point. Yesterday I was here. As you can see, this line was mine. The MACD was low. I had this stochastic down here. I said we can wait until we enter. I drew this line and these two highs, and the price broke up. Let me put this line there. It didn't go all the way to 20. It's up there. But because the price broke upward, I'm going to take this to the lower time frame and see what happened yesterday. Here. Is it here? No. Okay, let me drag this there. And then we go to the lower time. Okay, there. Again, look, we have the price broke the trend line here, right? This is the support and resistance line that broke. We draw our highs and lows. The market is kind of a sideways downward a little bit up to there. And then the price breaks this line up here. This line that we have, the price breaks and pulls back. This pullback is where we enter. I know this stochastic didn't get to the 20, but because we have a hidden divergence here, I normally enter. Let's see if it's a 50% or not. It's not a 50%. The price didn't get to the 50%. If my checklist doesn't let me to enter here, but if I want to, I normally cut my volume half of lot size probably that normally enter, and I take a small trade here. This is a very good scalp. It's like 250 pips. The price moved a lot. Gold is going crazy these days. And again, this happened again. You see these highs and lows, if you connect them and the price breaks this, comes back. This pullback is probably 50%, if I'm not wrong. Let's see. From down here all the way up there. Yep, it's 50%. See? You can enter here. Your target's gonna be up there. Let me put a line there. There. Your stop gonna be down here. Oh, you can see this. My stop is down here, and my target is that line. It hits my target, but it takes a long time to hit my target. 194 candles, which is about like more than 3 hours. I normally don't take this trade because it's end of the New York session, and I live in Australia. This is like a 3, 4 a.m. in the morning. I'm not, I'm in bed, so I can't take this trade. But if you live somewhere that you can't see this is end of the market. That's why it's just slowing down and it's very laggy and it hits your target, but it takes a long time. It's very risky to trade at the end of the market. But as you can see, it works every time you have these kind of resistances or a trend line actually 3, 4 times hitting the trend line. Whenever the price breaks, wait for the pullback. At the pullback, a stochastic is under 20, MACD is above. In this case, we're gonna buy, so MACD should be above zero. You enter, your stop loss is exactly where it should be. Your target, you know where your target's gonna be. You can exit at the 50%, which is there. You see 50%. This one is easier. If you exit there or here, that's gonna be 80 candles, 80 minutes. But if you go to the 100% target, it's 193 minutes. So this is kind of a mechanical system. You just have to be patient. You draw the lines, you connect the highs and lows, trend lines, and support and resistance line. That's the only thing you need. And wait for the price to break one of these lines, either the trend line or the support and resistance line. And then wait until it pulls back. At the 50%, enter. Your stop loss is down here, the low before the price breaks the line, and your target is exactly at the 50% or 100% of that move, the whole wave move. Put a line there and then drag your line up there and then put your target there. It's pretty mechanical, you know. Your reward to risk is 2 to 1 or 3 to 1. If you lose one trade, you have way better chance of recovering that in the next trade. You lose three trades even, you can have one trade and you compensate all that back. Please go and check, back test it. This is gold only. I'm checking this. Okay, I don't trade any other major currencies. So you check on the other currency pairs and see if it works or not. Connect the highs and lows, draw the trend lines and support and resistance line. Wait for the break and then measure this and go 50%. That's pretty simple checklist. I hope you enjoyed that video. If you haven't watched the previous one, go and watch. If you have any questions, if you have any comments, please leave it in the comment section. I try to answer all of that, and I hope you enjoy this beautiful system. Thank you so much, guys. Have a good day.